A surge due to a favorable US CPI data, but plunge due to the dot plot and the pull-out speech. Bitcoin fell below 68,000 and Ethereum dropped below 3,600. Bitcoin has become an important issue in national elections. Can crypto presidents bring a new global consensus? The Luna crash incident has come to a dramatic conclusion. A $4.5 billion fine shook the crypto world. Users' assets frequently looted by hackers. Is the crypto exchange OKX secured in dire straits? Tesla became the second largest public company globally. Is Musk's $56 billion astronomical compensation reasonable?
And the only person who hasn't been paid is actually the leader of the company, Elon.
Reimagine the world with cryptocurrency, master 24-hour wealth code, and let's slowly become wealthy together. June 13, Thursday, this is Bitcoin TV's channels. I'm Zu, and this is a 24-hour crypto headline sponsored by DeepCoin. Last night, US CPI data unexpectedly fell from 3.4 to 3.3, the first time this year it met expectations, signaling that inflation may be easing, boosting market expectations for future Fed rate cuts. After CPI data was released, Bitcoin quickly rose from 68,000 to 69,000. However, the Fed's interest rate decision and dot plot sent a different signal. Although it met market expectations by keeping the high interest rate of 5.5% unchanged, the dot plot showed that the possibility of rate cuts this year was reduced from the previous 2 to 3 times to 1 to 2 times, and most rate cut expectations were pushed back to 2025. This hawkish stance made market worry, and Bitcoin quickly fell back after news was released, eventually dropping below 68,000. Currently, the market is betting on the first rate cut in September, and the closer it gets to September, the greater the possibility of a pullback in financial market. Since April this year, Bitcoin's volatility has gradually stabilized, with prices mainly fluctuating widely between 60,000 and 70,000. During this period, Bitcoin's volatility has mainly remained in the range of 2% to 3%, indicating a relatively stable market. It's worth noting that over the past 2 weeks, although Bitcoin returned to the high of 70,000 and plunged to the low of 66,000, its historical volatility has shown a downward trend, gradually deviating from the actual price trend. This increase in volatility is an important signal of capital accumulation and market consensus formation. It means that investors generally adopt a wait-and-see strategy, leading to a decline in market trading activity and a gradual stabilization of volatility. With the approval of the Bitcoin spot ETF, the Web3 adoption rate of the world's top 100 traditional companies has also begun to surge. Data shows that the year-over-year growth rate of the world's top 100 companies participating in Web3 projects is as high as 39%, and 56% of the executives of the Fortune 500 companies have stated that their companies are involved in the Web3 field. Furthermore, the scale of tokenized assets has reached an astonishing 12.9 billion, with a growth rate of over 1,000%. In the first quarter, the daily average transfer volume of ATH stablecoins even broke 150 billion. Moreover, over 53% of the small businesses have started actively recruiting job seekers proficient in the cryptocurrency industry. These data vividly demonstrate the trend of cryptocurrency gradually moving towards centralization and globalization. Okay, please like and follow us, and we'll help you sort out the news from the crypto, blockchain, and mining industry that's closest to money in the last 24 hours. 2024 is a super election year, with dozens of countries and regions around the world holding key elections involving a total population of over 4 billion, of which the US election is undoubtedly the biggest focus. However, unlike before, this year, in addition to the various talk shows, like disputes over candidates campaigning and the movements being the center of attention, cryptocurrency has also become one of the hottest topics in the elections, ranking third in popularity. Remember, 4 years ago, it was still rare for presidential candidates to discuss the issue of Bitcoin during their campaign activities. 3 years ago, when El Salvador became the first country to adopt Bitcoin as a legal tender, many were still just observing. However, during last year's primaries, the situation began to change, and the era of cryptocurrencies being on the fringes of politics seemed to be gone for good.
In this U.S. election, the former U.S. President Trump, who spent most of his efforts on crypto campaigning, has the loudest voice and a 56% chance of winning, leading the incumbent President Joe Biden by nearly 22 percentage points. On one hand, these two people can be said to have resorted to all kinds of tactics to win the support of crypto voters. On the other hand, many crypto companies plan to inject a large amount of cash into the 2024 U.S. presidential election. In other countries, Argentine President Javier Milei often promotes Bitcoin as a way to replace central banks. Mexican presidential candidate Indira Kempis has become Mexico's first female crypto presidential candidate. The current British Prime Minister Rishi Sunak proposed to make the UK a crypto-friendly technology hub and plans to launch an official UK NFT. Japanese Prime Minister Fumio Kishida proposed to make Web 3.0 a pillar of economic reform.
It can be seen that cryptocurrency led by Bitcoin is penetrating the development process of various countries in an economic or political form, and the emergence of crypto-friendly countries has accelerated the journey of cryptocurrency from the fringe of finance to the mainstream. As more and more countries recognize the potential of blockchain technology and digital currencies, we may see a more integrated and stronger global crypto market. And those of you who have been following our channel are the early Web3 evangelists, enjoying the sweetness of the grapes first. The epic battle between Terraform Labs and the US Securities and Exchange Commission has finally reached a dramatic conclusion. This prolonged struggle not only left the global investors and cryptocurrency enthusiasts in awe, but also sparked a profound discussion about compliance and regulation in the crypto world. Terraform Labs, the once mighty cryptocurrency company, and its core figure dogecoin, the main developer of the Luna coin, were targeted by the SEC for alleged fraud. After months of investigation and court proceedings, the two sides have finally reached a preliminary settlement. But this settlement is no small sum, a staggering $4.5 billion, enough to make any cryptocurrency company wise.
In this settlement, Terraform Labs not only has to pay $3.58 billion in ill-gotten gains and $420 million in civil penalties, but dogecoin himself has to pay at least $204 million out of his own pocket to compensate investors who were harmed. In previous negotiations, Terraform Labs and dogecoin's legal team had tried to significantly reduce the total fine, even making the astounding demand to lower the $5.3 billion fine to just $1 million. But apparently, the US SEC didn't buy it, insisting on a hefty fine to deter wrongdoers.
Behind this settlement is the SEC's determination to regulate the cryptocurrency market. They hope this action will send a clear message to those cryptocurrency companies and individuals trying to circumvent federal securities laws and establish new standards of conduct. There is no place outside the law in the world of cryptocurrency. For Terraform Labs and dogecoin, this settlement is undoubtedly a heavy blow. Terraform Labs is currently in bankruptcy with only about $150 million in assets remaining. Paying off this massive fine will be a huge challenge. dogecoin himself also faces the severe punishment of being permanently barred from trading any crypto asset securities, while the SEC has not been short of feasting on this punishment against the crypto bigwigs. The CEO of the crypto exchange OKX personally took charge, with data leaked on Telegram, the accomplice. Musk's compensation case was backed by the chairman, but another Tesla shareholder sued Musk. Recently, the cryptocurrency exchange OKX experienced a major theft of funds. What exactly happened? On June 3rd, a well-known community member named Future is Bright disclosed that over $2 million worth of assets have been stolen from their OKX account. But on June 9th, a user named Le Yan from a Chinese community posted on Twitter that about $700,000 worth of crypto assets had disappeared from their OKX account in less than 15 minutes, using the headline 5 million taken in 15 minutes, while hackers enter OK Exchange to seize user assets without resistance. Besides Le Yan's case, several similar thefts occurred within 24 hours, resulting in $330 million being drained from OKX so far. Subsequently, rumors spread that OKX founder Star Su had transferred a large amount of crypto assets to a Binance wallet. This sparked considerable attention and panic among users. After several days of turmoil, OKX finally responded in an attempt to control the situation from worsening.
In this counterattack, the most exciting thing is OKX CEO Xu Mingxing's ghost-catching operation. He personally took charge and formed a special operations team composed of top technical experts and an internal supervision team, vowing to uncover those insiders hidden within the exchange. According to analysis by Web3 security group Dilation Effect, OKX's two-factor authentication 2FA mechanism allows attackers to switch to a less secure verification method, allowing them to whitelist withdrawal addresses via SMS verification.
OKX exchange has faced security challenges before, so looking back, data leaks on Telegram had previously allowed deepfake scammers to steal up to 2 million from OKX users. Similarly, in October 2023, SIM swap attacks on Friendtech users resulted in losses of 400,000. This recent security incident was brief but intense, with OKX not only successfully countering the attack but also showcasing its robust capabilities and potential. OKX's successful counterattack was no coincidence. Their swift recovery and improvement were supported by a powerful technical team and advanced technology. From defenses against AI deepfake techniques to the upgrade two-factor authentication, OKX continually innovates to provide users with a safer and more convenient trading experience. Elon Musk, this name has become synonymous with modern technology. He's not only the soul of Tesla, but also the helmsman of a series of innovative companies like SpaceX, Neuralink, and more. Today, Tesla's shareholders face a major decision, whether to support Musk's $56 billion compensation plan. This decision not only concerns the company's future, but also Musk's personal state or departure. As we were putting in together, there was a new development on this matter, saying that Tesla shareholders have approved Elon Musk's compensation plan, meaning Musk will not leave Tesla.
The ratification of the pay package is really about fairness. Fairness to our CEO. If you look at what's happened at the company over the last 6 years, tremendous value creation, and he's led that. Right. Obviously, the Tesla team has been instrumental in it, but if you sit back, shareholders have benefited tremendously. Over $730 billion of value creation. Employees have benefited tremendously. They're all shareholders in the company, so their stock has risen. Customers have benefited by the tremendous innovation. And the only person who hasn't been paid is actually the leader of the company, Elon.
Just as Tesla shareholders voted to reinstate Musk's $56 billion compensation, one of Tesla's institutional shareholders has sued Musk again. In a lawsuit, he accused Elon Musk of using insider information to sell Tesla stocks, earning billions of dollars, and demanded that the court order Musk to return the illegal profits. The lawsuit also alleged that Musk was disloyal to Tesla in several incidents, including transferring Tesla employees to work on X, Tesla still having to pay advertising fees after Musk's acquisition of X, helping XAI hire Tesla employees, and transferring AI semiconductors intended for Tesla to X and XAI. Currently, Musk is under investigation by regulators to determine if he violated federal securities laws when acquiring Twitter in 2022.
It's really one wave after another for Mr. Musk. There's no doubt that Musk's importance to Tesla is undeniable. Under his leadership, Tesla has grown from a little non-electric car startup to the leader in the global electric vehicle market, with a market value that once surpassed Apple's, becoming the second largest public company globally. If Musk truly leaves Tesla, it could lead to a significant drop in Tesla's stock price, a shrinking market value, and even affect the company's financing capabilities and market confidence. However, some believe that Musk's departure may not necessarily be a bad thing. Although he has brought tremendous success to the company, his personality and management style have also caused controversy and conflict. If a suitable successor can be found, Tesla may be able to continue on a more stable and professional management path. So what do you think?
Delphi Digital posted that driven by Telegram's 900 million user base, the Tron ecosystem has quietly grown, and its daily active addresses have surpassed Ethereum. According to HODL 15 Capital's monitoring, data for the US Bitcoin Spot ETF yesterday, June 12th, showed that there was no inflow or outflow of funds for Grayscale's GBTC. Additionally, IBIT's trading volume exceeded $1 billion yesterday. The blockchain project Ether is launching its decentralized cloud computing network on the Ethereum mainnet, with the project recently raising $120 million in node sales. It aims to find underutilized graphics processing units for tasks such as AI model training and gaming. Recently, stablecoin issuer Paxos has laid off about 20%, or 65 employees. Paxos has offered affected employees 13 weeks of severance pay, 3 months of subsidized health insurance, 3 months of re-employment assistance, and a 2-year extension for exercising vested options. On Sunday, miners sold over $200 million worth of BTC, the highest level in 3 months. After Bitcoin's fourth halving event, Bitcoin miners have experienced nearly 2 months of strained income and have started selling their Bitcoin reserves.
Have truly accomplished things all know that when you accumulate one thing on a 10-year scale, when you decide on a 10-year time frame whether a career can succeed, your probability of success will soar to 70%. From the age of 20 to 50, you have 3 such opportunities. As long as you accumulate in one direction, every 10 years is an opportunity, and each time you have 70% chance of winning. If you fail this time, don't change direction for the next 10 years, and the next time you'll likely have 95% chance of winning. So the path to success is truly not crowded, but it's lonely, requiring patience because so few people can persevere. Alright, that's the main content of today's program. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry. We have news updates as well as in-depth special reports. If you find our channel valuable, please share it, follow us, and you can also become a member. So let's become wealthy together and add a zero to our assets during the bull market. We'll see you again tomorrow.